Hi, this is Kyle in Fort Collins, and tonight we're going to talk about tax deductions and how anyone can get significantly larger tax deductions. Think about this for a minute. What are the biggest expenses in your household? First, your house, your transportation costs, your food, and of course, health care. But actually, your biggest expense every month is taxes. There's a good chance that you're overpaying anywhere from $3,500 to maybe $6,000 every year just in taxes that you don't have to pay. Now, the best way to get tax breaks is to open your own home business. Now, the government actually encourages people to open small businesses. There are special tax breaks just specifically designed for small business owners. The reason they encourage it so much is because the more small businesses in the United States, the more stable our economy can be. And I know you're probably thinking, well, I don't have the time or the money to open a small business. Well, let me tell you this, the government only requires two things to qualify your home business. First, you must work it regularly. And they're only talking about a couple hours a week. And you know what? For $6,000 a year, I can find a couple hours a week. The second thing is, it must intend to make a profit. That doesn't mean that you have to be profitable. It just means that you have to intend to make a profit. But here's a little secret. If you are not profitable after a couple of years, there's a good chance the government could come back and say they want all those deductions back because they don't believe you have a valid home business. I used to say, well, I don't have the time and the money. But then I realized for the amount of savings we're talking, and again, we're talking $3,500, $6,000 a year, that means my business is actually going to pay me. After the first couple months, you cover your startup costs, and then any business or any money that you actually make in your business is pure profit. So imagine even if you pay, let's say $1,000 to get a startup cost, but you're saving $500 a month in taxes, a couple months, your business is paid off, and everything past that, you're in profit mode. So remember, if you're not operating a small business, you're definitely overpaying in taxes. Are you still thinking you can't afford to do it? Well, here's news. You can't afford not to do this. Here's a hint. Make sure that you choose the right business. Remember, you have to intend to make a product. You also have to ask yourself, do you want to sell potions, lotions, powders, and pills to your friends? Or do you want to choose a business that already qualifies for those two IRS rules I mentioned earlier and doesn't require selling or recruiting, and of course, unless you want to? Go ahead and click on that link right below the video, and you're going to be able to see how all this is possible. Thanks for listening. This is Kyle in Fort Collins. We'll see you soon. Click on the link in the description below the video and you'll be taken to our business page where you will see a very short video that completely explains where you can start deducting things like your home, auto, food, and more immediately the day you open your business.